Hey, welcome back to Living in Minnesota. My name is Joe Carmack, and it's time for your Twin Cities real estate market update. We're going to let you know everything you need to know for this winter going into the winter months, and then we're also going to talk about next spring. All right, so let's get you into the numbers. The graph that you're looking at right here is the month supply of inventory. So in case you're new to the channel, COVID and all the craziness happened here, and that pushed us down. Now, on this graph, what you're looking at, the lower we are, the more of a seller-favored market it is. Higher, the more of a buyer's market or balanced market that we're in. So as you can see, we've been quite a seller's market for quite a while. Generally, about this 4-month supply line, 4 to 6, would be considered a balanced market. So we haven't even been close to balance for quite a while. But as you can see here, with COVID happening, that pushed us down to just some real extremes, which we've since really come out of quite nicely. Since this summer, we really have seen no changes, actually. So you can see since May, we've been sitting at 2.5 month supply of inventory, meaning that at the current rate of sales, everything would be sold out of the market in 2.5 months. It doesn't mean a lot for you guys in that sense. Just know that the higher we are, the more we'd be getting towards a balanced market. But since May, we have seen zero changes at all. So we're still sitting at 2.5 month supply of inventory. But then let me switch here to the month-to-month changes, and I'm going to zoom this in because that's kind of crazy to try and look at. I'll give you the 10-year graph here. So this is what you're looking at for seasonality. So this is what it looks like summer versus winter months. Again, remember, the lower we are, the more competitive seller's market is. The higher we are, the more of a buyer-favored market it is. So as you can see here, things have been trending back towards being more balanced both during the winter and the summer months, which is good. An interesting thing that I am noticing is our summer months aren't as aggressively straight up and straight down like they have been in previous years. So you can see most of these have a much more sharp peak. And I'm going to show you again on another graph too. Our sale prices are doing the same thing. We're seeing more of a rounded curve, and I kind of like that. It's less aggressive. It's less hot and cold. So that's good. Overall, you can see we're at 2.8 on that month-to-month changing number. And no real significant surprises. We usually peak out kind of in that September timeframe, as you can see here, September, October. And so I suspect we will start to see this go down, which would be pretty normal. Maybe we'll stay around flat for another month, but overall, there's no big changes. I'm going to come back to why I like the winters in a minute more, but this is part of that reason. It's just simply less aggressive. So let's go to the sale prices and talk about what that one's doing. This is another one where we're just simply seeing it to be less straight up, straight down, which I don't mind. You're kind of seeing this little like King's Crown look at the top of our last 3 years. As far as prices, they don't really have one specific month like we have previously. I'll actually zoom this one out for you a little bit. You can see we used to have a little bit more of a specific peak and then a drop off. And we're not seeing that so much. You've got to kind of erase these COVID years right here from your mind because everything was just kind of wonky anyways. So we're seeing less of a spread between the peaks of the summer months and the valleys of the winter months, which is good. And then we're also seeing that be more of a rounded curve. So we like to see that. I'll zoom back in here for you. This is what we've been seeing since June, like I mentioned. So we peaked at about 401, and then we've been coming down. August was back at 400. September did drop more significantly, maybe than normal, to 390. I'm not real concerned, though, considering we also stayed higher longer, so we were sort of due for a bigger drop. And it was still only 10,000 that we saw from August to September's numbers there. You can also see over here, last year, August to September was almost 10 grand. Okay, so it was just a hair under. So it's very normal to see that kind of a drop, 9 grand in 2023. Let's see here. So about the same, not quite for that year. So no significant changes there, but we do expect them to be coming down. So that's why I like winter months in particular. Sellers become a lot more motivated because they've put their house on the market because they need to sell, more of a time crunch generally, and they're also going to be seeing fewer and fewer showings coming up, which I'll show you in a second. But when the sellers need to sell, they've gone through the summer months, they realize they've probably overpriced their home. They're going to be more motivated. There's also fewer buyers out as the weather starts to change. Buyers aren't in the market, sellers get left on. And so that starts to invert those sale price numbers. Also worth pointing out now, as I do every year, if I go back, you can see on last year here, this is January's numbers right here. We bottomed at 352,500. This year we were at 370. But then you can see pretty much immediately those numbers start to jump up very, very quickly. And you got to remember, these are the closed sale price numbers. So the buyers put that property into contracts roughly 30 days beforehand. So our February number jumped up 10 grand from January. Those are homes that were put on the market in January buyers got them under contract in January, and then they closed in February. So really, our spring market does happen very early. You can see this one here. We pretty much sat flat from January to February, which can happen when we have really, really snowy Januaries or even Decembers. And so if the market holds off a little bit, they may. However, then all of a sudden it just explodes. So if you're thinking spring, it's important that you understand spring happens for us in January. I've heard some agents used to say, oh, it starts around the Super Bowl time. No, that's not when the market really takes off, because you can see we're already closing. So if you're starting in February, towards the end of February around Super Bowl time, then all of a sudden those closings are happening in March and April. So if you're thinking spring, just know those are the variables. It also means if you're not ready for early spring like January, waiting till April or May, things have actually already started to cool off. As you'll see, our numbers generally peak around the June timeframe. So peak numbers in June, having gone under contract a month or so previously. Let me flip that to the, let me switch to this one here, and we can see the max graph on what the long-term averages have been. We really didn't see any major changes last year. It's been a little bit more up and down, as you'll see here, over the last year or two, just with interest rates that have swung so significantly within a month or a week's time frame. So that has kind of affected things more, but overall there hasn't really been too significant of a difference. Again, you have to erase all this sort of craziness, which was the COVID years when sale prices really jumped up very quickly. Then they plateaued off a bit with those spikes in interest rates you heard about before in the high sevens. I'm going to get to interest rates here actually in a second, but overall, rates haven't changed much, and so the market has just been keeping going like it's been. And we're pretty even keel in the Midwest. We don't really see those fluctuations as dramatically as other parts of the country. So with home prices doing that, let's look at what our days on market's been doing. I'll reference shortly for the seasonality, but it's just good to know overall how quickly our homes selling. So the lower we are in this graph, the faster homes are selling. The higher, the slower they're selling. We're currently sitting about 23 days on market, so no significant changes there. Things are generally selling a little bit slower, which overall is kind of nice because we're comparing slower to the fastest market we've ever seen ever. And so we want that to be slowing down a little bit. Just generally speaking, buyers want more time to be able to think about things, not feel so rushed. And the more the buy side of transactions will feel more relaxed, then more sellers will get into the market, which will provide more homes for those buyers. So slowing down kind of eases up for both sides of the transaction. And even sellers, they always want a fast sale. However, when all of a sudden I put your house on the market and it's got multiples the day later, and all of a sudden you're moving in 30 days from now, that can feel super rushed. So sellers feeling more relaxed, buying feels more relaxed is generally what we're seeing in the market. And then if I flip you into what the month-to-month changes is doing, let's zoom that in a little bit. This is, of course, seasonality. As you would imagine, during those snowy winter months, higher days on market, homes aren't selling as quickly. And then, of course, no surprise, during the summer, things are selling fast. So how are we changing here? Well, let me actually pull this out a little bit. It might be a little bit better for you guys to see. Within that 10-year graph, you can see if we're looking at the tops, those would be the winter months. We've been selling very, very quickly. Overall, this was COVID. Let's ignore that. But generally, we have trended back up. Last year was kind of an anomaly. We saw those numbers go down, which was surprising because we're expecting numbers to go up. However, with what rates did and stuff, not terribly surprising with how that affected the year. And then if we're looking at the bottom summer months, that also was trending up. We expected to see this number trend up for this year as well. However, it actually didn't. So that means homes this summer sold a lot more quickly, or a little bit more quickly than we would have expected. Wouldn't have been surprised if this number was 16, 17, 18, and you can see it was at 15 for this current summer. So we're seeing those numbers come up. That's not surprising at all. The market's slowing down as we do cooling off going into the winter months. We're currently sitting at 24 days on market, which is pretty much on track with last year. There was 21 days last year, but then you can see we sat flat for 2 months, which is kind of unusual. 1 year ago between August and September numbers. So 21 days last year, 24 days this year, no significant difference there. If you go back one more year, 20 days, 17 days for September's numbers there. So generally things have slowed down a little bit more now going into the winter, but they were faster during the summer. So I don't see any real significant difference there. If you pull out on the max there, we want to see this trending back up, like I mentioned before. So overall, we're kind of getting there, but not very smoothly. Summer months, or the winter months, sold faster previously. Then they sold slower this winter, which is good. And then the summers didn't sell slower, but we're slowing down more. So who can guess what's going to go on? But overall, that's generally good news. That's also going to be affected. Ooh, hold on. Let me mellow this out for you. That's going to be affected by the number of new listings that get put on the market, which is what you're looking at right here. This is the average over the 12 months. So, of course, we saw a ton of homes get put on the market. Then after COVID happened and then the interest rates started to spike is why you're seeing that huge drop. Interest rate spikes, the number of people listing went down. But also there were so many people that bought and sold during that COVID timeframe with the super low interest rates. That was overinflated. And so then it was kind of a perfect storm to see the number of new homes getting put on the market drop. So it's not a concern, but it's kind of makes sense for why things slowed down. And then we saw a big spike, and then we've just overall been growing pretty steadily, which is what we like to see. It means sellers are having a little more confidence getting back into the market. Rates have come down slightly, but mostly people are just realizing that, they can't bank on all of a sudden rates dropping to make their move. And so people are getting into the market, and overall things are moving on quickly. As far as the number of homes getting listed, now this is the number of homes that are actually for sale. So there's obviously a correlation, but if all the homes get listed that are also snatched up right away, then the number of homes for sale would be dropping. But we're also seeing that number go up. So we're seeing more new listings come in the market, and we're not seeing them sell off as quickly. So the number of homes is staying there. That just tells us that there's slightly more sellers going into the market than there are buyers snatching them up, which is actually kind of a good thing because that increases our inventory. We want to see that inventory number going up. I'm sure that's affected by the rates being still generally higher and with people having bought not too long ago, so their motivation is a little bit lower. So generally we like that. And as interest rates, hopefully in theory, hypothetically come down over the next year or two, we'll see more buyers getting into the market. And so hopefully that number will probably keep going up, but I don't think it'll change too significantly. And then last, why don't we look at the number of closings that are happening? These are all very related, but the number of homes getting listed, then getting snatched up. We did see this huge drop, which I've been talking about for a little while. This is, again, a ton of people that bought during COVID era. So it's kind of a weird anomaly that we sort of have to just delete from our mind from being any kind of a normal trend. Pandemics don't just happen every day. So you sort of have to ignore this huge spike. However, just knowing that because so many people bought and sold during that 2020 to 2022 type of time frame, now naturally the number of people that are buying is so much lower. So it makes sense that we kind of stole from the future and had extra people moving during those timeframes. In any case, we're seeing this number go back up, which is pretty good. The market, I mean, with my own business, this is pretty consistent with what I've seen. Like the number of closings that I'm having is pretty consistent the last few years, but things are generally trending up. And then finally, before we go to interest rates, let's just talk about the number of showings that are happening per listing. So this is important for buyers and sellers. But primarily with sellers, if you're seeing fewer showings on your listing, I don't think it's a point to be really concerned about necessarily. Sometimes people still have the mindset from a few years ago where they're like, I should see 15 showings like my neighbor did, and then my home's selling for way over. That's not actually the case necessarily. And as we're going into the winter months, just don't get too desperate to get your home sold if you're not seeing a lot of showings. That's kind of okay. It's normal for this time of year. Let me pull you in a little bit, but this is what we're doing month to month. So the number of showings, of course, is going to be dropping as we get into those winter months. It's perfectly normal. We're on track with where we should be. So don't be too desperate to sell. But also as a seller, you should know it's not going to get any better for the next few months from now. Okay, as we go through really to January, that's when things are going to be bottoming out, December kind of time frame. So you're not going to see any relief until January or so. However, should you take your home off the market if it's not selling? Of course, if you're on contract with an agent, you should go talk to them. However, you should know it has to be off of the market for a full 90 days for your days on market counter to reset. So if you're going to do it, you should do it soon and then let it breathe for 90 days so that you start again with 0 days on market. People are still going to be able to go back and find your old listing, see that it previously didn't sell in those terms. So it's not completely going to help you. But overall, if you're going to take it off the market for the winter months, for the holiday season, you're going to just want to make sure you do it for at least 90 days. So just little tidbits there. But again, as soon as January hits, look, we go from 3.8 to 5.3. We go from 3.4 to 4.9. Percentage-wise, that's a pretty significant jump in the number of showings that are happening, meaning that buyer activity really does explode right after holiday season and going into January. And of course, the thing that's affecting all that more than anything else is going to be interest rates. And this is Freddie Mac's website. I've been kind of annoyed with Mortgage News Daily, which you always hear me reference, but their site's kind of being ghetto lately. So looking at Freddie Mac's numbers, you can see we're at 6.3 currently. And as far as this 52-week range, you can see this is almost the lowest we've been in the last year. So the lowest we've ever been was actually about last week, a couple weeks ago, which was only at 6.25. 6.26. So overall, rates really are looking pretty good as far as the last year has gone. Within that time frame, we've also been as high as 704. So there's not really been any major changes. This graph here, I've got pulled out to, what is this, the 3-year graph that we're seeing? Let's put it into the 3-year graph. Generally speaking, in the last 3 years, there hasn't really been any significant change. That's really what it comes down to. Or to what extent there has been, there's been high highs and low lows, but overall, you can see here, we're pretty similar to where we were. 3 years ago, we were at 666, terrible number. And we're currently looking at 6.3. So slightly better in theory, but it really has just been more volatile than we'd like to see. And if I pull you back out, you can see this is when the market kind of spiked with things. And this was like the shock to the system of, holy cow, we just went from, 3% to 7%. That was a pretty big shock. However, it's not really changing anytime soon. Presidential election, we thought that was going to change things. A whole number of variables. I've been saying like a broken record, hey, interest rates should be going down. They haven't really, unfortunately. One thing I do want to point out on here is a lot of people think once they get pre-approved, they're locking in their interest rate. That's actually not the case. So you're not locking in your interest rate until you get that home pending. So you've got to do your buyer consult, do your showings, get an offer accepted. And then it's once you get your offer accepted, that's when you can lock in those interest rates. And generally, if it's less than 30 days out, it's an easy lock. So just keep that in the back of your mind. We are expecting things to get better, so I don't think people need to like hurry up because rates are low. But generally speaking, just know that you're about a month out from locking at any given point. So hopefully that helps you plan for the future. My name's Joe Carmack. I love helping people relocate to the Twin Cities in particular, but all kinds of locals as well with buying and selling. You can find my information in the description, and of course, grab that link to my consult calendar and get yourself scheduled. My name's Joe Carmack. I appreciate you so much for watching. I'll see you next time.